everybody finds this when you know, if I tell you you got 6 months to live, you would go looking for a cure. And if I told you every asset that you hold in Canada is going to be seized from you within 6 months,
that could happen.
You would think about how you're going to get your money out of Canada.
Yeah, we already thought about that.
You know, and the point is, you didn't think about it for the 20 years of your career when it just wasn't the priority.
Yeah.
And then when you're faced with a crisis, a challenge, you start thinking. So I said, Eric, tell me about that Bitcoin thing again. And he started describing it. And I started thinking, how can I get more information on that? And he said, well, you can go and watch this podcast, and you can learn anything on YouTube. Right? Mm-hmm. You can learn it if you want to learn. All right. I learned a lot from you on YouTube. I learned a lot about diets and ketogenic diets and the carnivore diet. And I learned a lot about food politics, and I learned a lot about psychology. And also I started studying up on crypto, and I started speed watching and intensely watching. And I went and I saw the work of Andreas Antonopoulos, and I saw the podcast of the early crypto developers. And then I started looking for the books, and I read the Bitcoin Standard, and I got, quote unquote, dragged down the rabbit hole. And I came to the opinion that the solution was a non-sovereign store value bearer instrument, of which gold had been the best of those.
Yeah.
But then I applied my engineering mind, and I thought the way Heinlein would have thought about it. And I said, okay, over a long enough timeline, what's the mortality rate? Okay, short, people that think short time think about weeks or months or years. I thought, well, let's try 100 years. I looked over 100 years, and I realized that at a 2% inflation rate, and that's the rate at which we mine more gold. At a 2% inflation rate, that means the half-life of gold is about 36 years, which means that the value of the gold you hold is cut in half 3 times over 100 years, which means that if you started with the 100, you ended up with 12.5% of the money you started with over 100 years.
Explain that in a little more detail. How does that happen with gold?
Say you owned 100% of the supply of gold this year. The gold miners produce 2% more gold every year. It compounds, which means it takes 36 years before they've doubled the supply of gold.
Got it.
You own half the supply of gold in 30 years. You own a quarter of the supply of gold in 70 years.
Right, so the relative scarcity
12%.
decreases as you hold it.
It's inflating.
Okay, got it. Yeah.
And so gold, although it's quote unquote sound money, and in the Austrian economy school of thought, it was the best money, it's not perfect money. The reason that you had stable prices throughout the gold era, the gold standard age, is gold was inflating about 2% a year, and the economy is growing 2% a year. Mm. And so if the output of goods and services grow at the rate of the money supply, the price is constant. Okay? If the money supply is fixed and the economy grew 2% a year, prices will fall 2% every year.
Right.
And by the way, in technology, when you look at technical products where the company grows productivity faster than 2%, in a gold world, the price would fall very fast. Okay, so what's going on is there's a race between productivity and money supply. And if I can drive the price of the product down 20% a year, I can inflate the amount of money 10% a year, and the price of that thing will fall 10%. Yep. But if I didn't inflate the price of money, it would fall 20%, you see. So I looked at gold. I said, I need something like gold. But the problem with gold is it's a conventional asset. It had kind of recovered a bit. And I thought, it's not perfect. It's the best idea in the 19th century. And it's not quite working in the 20th century. And so I started thinking, what if someone designed digital gold? What if now we go back to the engineer saying, can you perfect gold? And the engineering idea, how do you fix gold and make it perfect? Well, you make it impossible to mine anymore. What if, and then we get into the fantasy thing. What if what if God came down, and there's a bit of theology here, if you allow me. If God came down and wanted to fix gold, it's impossible to make any more gold, right? How can you make it better? It'd be really great if it was weightless.
Mm-hmm.
How do you make it better? I'm going to cast a spell and allow you to teleport the gold anywhere on earth. If God said, I'm going to implement a system of 21 million gold coins, but we're going to call them God coins, and I'm going to keep them in a bank in heaven, and I'm going to let you transfer, any amount. I'm going to let you subdivide it by 100 million, and we'll call them Satoshis. And I will let you transfer peer-to-peer and pay anybody, anytime, instantly at the speed of light, and I will keep track of the ledger of who owes what.
Incorruptible way.
I will never cheat you, and I will do it forever, for free. If God offered you that kind of divine bank, and you were sitting in Argentina when the currency was collapsing to zero, the Argentine peso went from $1 to the peso to 1,000 pesos to the dollar over 20 years, and it did it 5 times over the century.
Right.
Or if you saw it happen in Russia, where their currency collapsed, the currency collapsed in Brazil, not 25 years ago. Currency collapsed in Germany a few times. If you read the history of civilization, read Durant. Durant's talking about currencies collapsing in Russia in the 16th century.
Yeah.
The Roman emperors.
It's a substantial lifetime risk.
Pretty much, on average, the currency collapses every 30 to 40 years in most political jurisdictions for all of human history. And if you get a currency to last by the way, the best currency of the last 100 years is the dollar. The U.S. won every war of the 20th century. My house in Miami Beach traded for $100,000 in 1930. It would trade for $100 million 100 years later. 99.9% collapse in the value of the dollar. The winning currency of the 20th century, the best currency in the world, lost 99.9% of its value. That's a winner. If you do the math fast, just for the viewers, it works out to 7% a year.
7%.
Inflation over...
In the best currency. And how do you calculate the inflation? Like, the inflation calculations are always opaque to me because...
The easy thing to do is take the number divided into 72, and that means that you're halving or you're doubling every 10 years. 7 into 70 is a 10-year half-life. So the issue is, what's the half-life of your money?
Against what basket of goods?
Okay, and that is the trick.
That's for sure. That's the bloody trick.
Because what's the yardstick? The government wants to calculate inflation by constructing a market basket of consumer goods.
Yes.
And then the trick is they just keep changing what's in the basket. So they call it a hedonic adjustment.
Yeah.
So
exactly. Well,
I create a basket of. By the way, I create a basket of goods that are not likely to go up in price as I print money, and I put that into the basket. It's like if I said
that's inflation of the inflation
organic
standard.
Grass-fed beef. This pops up in organic diet or carnivore diet or diet in general, where people note that if everybody ate meat and if it was all organic, then we probably couldn't support the 8 billion people on the planet. We could support 800 million people. So it behooves us to convince everybody that they should eat biscuit. And that's what the Egyptians figured out 5,000 years ago, that, if you grow grain and you feed the population biscuit, you can raise an army, and it's very cheap. How does the army travel? They travel on biscuit. So, is this good for 40, 50 years? No, your teeth are going to fall out. It's awful for your health. You're going to die 20 years early. But it doesn't matter when the people fighting the war are between the ages 15 and 30. Like, you won't kill yourself with an awful diet
fast
before the age 25. Right? By the way, in a war, you're going to die from influenza, right? You're going to die from the pathogens first if the bullet doesn't get you. Second, you're not going to die from malnutrition, except that I can't give you a cow. So I can only give you the biscuit.